We are live from Bloomberg's world headquarters in Midtown Manhattan and streaming on Twitter. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Reunited, it feels so good, but crypto is destabilized. Investors getting jolted by volatility rippling through the crypto world, from Bitcoin's dramatic drop and rebound to the collapse in UST.
We'll unpack the growing risks for consumers and investors with John Wu, president of Ava Labs, the lead developer of the Avalanche blockchain.
And the ongoing fight for a physically backed U.S. Bitcoin ETF. We'll discuss with Bitwise CIO Matt Hougan as the SEC stakes its claim on digital assets.
All of that is ahead, but first let's get a snapshot of the market. The best way to do that on the Bloomberg terminal, CRYP Go, that is your function. Of course, we're coming off several days of brutal selling really across digital currencies, including for Bitcoin. Today, though, snapping a 5-day losing streak. While we are off session highs, we are back north of 30,000, actually north of 31,000 at the moment, while a little bit of outperformance is coming from Ether and XRP, which are each up a little more than 2%. But of course, the real story that has captured our attention over the last several days, Matt, is Terra USD. Of course, this is an algorithmic stable coin. It is supposed to trade exactly at $1, and yet that is not what has happened over the last several days, Matt.
Yeah, no, absolutely eye-popping, jaw-dropping. When I woke up at 2 o'clock this morning, I could not believe it. Like, holy expletive. I knew we had broken the buck these last couple days. This is a 3-day chart, but I went to bed at around 6 o'clock, and then we dropped to 60 cents on Terra US dollar. That's like a catastrophic collapse. We're still only at 90 cents. So something has gone horribly, horribly wrong here. Even Treasury Secretary Janet Yellen spoke about it before the Senate Banking Committee in Washington. Here's what she had to say about stablecoins.
Terra USD experienced a run and had declined in value. And, I think that simply illustrates that this is a rapidly growing product, and that there are risks to financial stability, and we need a framework that's appropriate.
All right, so this first person that I emailed this morning after I saw this story was Mike McGlone, Bloomberg Intelligence commodity and crypto strategist. You're the poor Mike of the two crypto Mikes that I know, but unbelievable, right? I had so much faith in this because Novogratz has a tattoo of Luna on his shoulder, and yet it seems like complete and total failure. What happened?
Well, what happened with this is a nascent technology. Remember, it's algorithmic. And it's supposed to automatically buy when it goes down, automatically sell when it goes up. When the whole thing goes down, like Luna, well, that's a problem. And I think that's the difference with other stable coins. Like, what's the most widely traded crypto on the planet? Tether. It's a crypto dollar. So, but it's
backed by actual dollars or treasuries, super safe investments. This was very complicated. Terra trades in and out of Luna. Luna's backed with Bitcoin and Avalanche and other assets. What are the broader implications?
Well, I think, if anything, it shows the value of Bitcoin. It shows that the technology is nascent, and what it's going to do is make all these crypto geeks go back and figure it out. And it shows that algorithmic stablecoins have issues, so we're going to get there. But the key thing is it's going to get better. The bottom line is the stablecoins or crypto dollars are the #1 trade. This is just one of the issues with the newer ones.
All right, let's talk about the big kahuna here. We've got a chart of Bitcoin in blue, and you got Fed funds futures going out a year in white. What do you make of the drop that we've seen to, 30,000 is the obvious key level for anybody who's paying attention. Yeah. Are we going to see a big bounce from here now? Are retail investors backing up the truck saying, this is my chance to get back in?
So that's the key thing, Matt. I think retail's getting hit in the stops and institutions are getting. I just came back from Crypto Bahamas, and they're getting in this market. They're looking for ways to do it. And I think this chart's going to show us when it's going to bottom. So what you see in white here, Eric, if you can narrow down here, that's the Fed fund futures 13 months from now, 1 year from now. Once that starts bottoming, if you screw over here, the last time it bottomed was right before Bitcoin bottomed, and the whole thing took over. So right now, the market's worried about the Fed's taking away the punch bowl, and I think once that bottoms, we're going to see Bitcoin's going to bottom maybe around 30,000 and head towards this next key level, which I believe in the big picture is $100,000.
Wow.
All right, Mike McGlone of Bloomberg Intelligence, thank you so much. Let's hear from the other crypto Mike now. Billionaire investor Mike Novogratz says that there is more damage to come, at least in the short term.
Well, the short term, outlook is painful. It's going to be, like I said, volatile with the rest of assets as the Fed adjusts from free money to normalized conditions. I really do still see this as a very exciting asset class with a lot of momentum.
Joining us now is John Wu, president of Ava Labs, the lead developer of the Avalanche blockchain. John, great to see you. Let's first get your take on what we just heard from Mike Novogratz. Where do you see the near-term trajectory from here?
Well, I think no one can predict the near-term trajectory, but I do believe I can tell you from my seat as an operator that development continues. Every day I'm getting incredible amounts of resumes from great developers from all the best schools who want to enter the space, but also from places like in Web 2, whether it be Facebook or Google, those engineers, those business development partners want to come into the space. So in times where the asset prices are down, amazingly, innovation doesn't stop and builders continue to build.
Yeah, I wonder what you think about the rising rate environment or the quantitative tightening that we've seen. How does that affect disruptors like you, innovators like you? Because it's difficult for those publicly traded tech companies that rely on low rates.
Well, listen, I mean, as I think Mike talked about, I'm not sure in this segment, but Bitcoin and a lot of cryptocurrencies have been far more correlated now with, call it, traditional growth assets. So the crypto assets are down less even than some of these mega SaaS companies or other traditional high growth type companies. So the macro environment will have an effect on the transactional and trading volumes. We'll see that in Coinbase earnings after this report. Not to highlight anything that's unknown, but I think the street is already modeling down transactions in 1Q down 10% year over year and probably down like 40-50% from fourth quarter. So transactional trading speculative volume will go down, but development and new innovation will continue.
Yeah, and we'll definitely be looking out for those earnings after the bell. Meanwhile, before the bell, when Matt and I came into the office at 3 a.m. this morning, all we could talk about was Terra USD. I want to get to you now on stablecoins. We also heard the Fed warning about the financial risks surrounding them in the financial stability report it released yesterday. Here's a quote for you. The increasing use of stablecoins to meet margin requirements for levered trading and other cryptocurrencies may amplify volatility in demand for stablecoins and heighten redemption risks. John, when we look at what happened with Terra USD over the last several days, are we talking about realistically a systemic risk here?
So the thing to highlight here is this is an algorithmic stablecoin, unlike some of the other stablecoins that are backed with US dollar in reserve 1-to-1. So all the successful stablecoins have had some sort of quote unquote run on the bank like we saw yesterday. This is probably coupled and dramatically effective because of the macro environment causing a massive sell-off in the space. But we've seen this movie happen before in traditional finance. Terra Luna stablecoin is no different from an emerging market currency that pegs itself to the US dollar so that it can have more stable economy in order to do import and export, because the smaller economy cannot withstand the huge volatility of their currency or their economy going up and down like crazy. And then ultimately what they want to do is peg it to a basket of currencies. So Terra Luna was actually moving towards that. They were moving towards having a Bitcoin reserve as well as Avalanche in their reserve, that basket of currencies. Unfortunately, there's also inherent leverage in the system. And what happens overall is when something like that, an attack happens, just like with the emerging markets, the first thing that you do is you de-lever. And a lot of deleveraging has already happened in the space of crypto.
How much of a hit to the industry is this, John? And, the drop in value of big coins like Bitcoin. You came from the street. You were working with the smartest of the smart. And we've seen, a lot of your colleagues and younger people look for jobs in crypto, leaving Wall Street and going to Silicon Valley, but not in the tech startups, rather as crypto traders. Is that going to slow down? Is that going to get hurt, that move, because of the hit that crypto's taken?
It may slow it down, but it won't hurt the move. I mean, let's keep going with this analog. I lived through 2008. The biggest problem with 2008, when money markets broke the buck, or when Lehman happened, was you had no idea as a traditional finance person what the mark on the book was, and where the risk basically sat, and where they can liquidate it if that was the situation. The good news here with all of these algorithmic stable coins is the transparency of the blockchain and the instant settlement. So if you look at previous cases where this has happened, ultimately it goes, if it's a real stable coin, it goes back to one, and they continue providing the service they need for the ecosystem of decentralized finance.
We just had a viewer writing in on the Bloomberg terminal through the IB function saying that Tether USDT has never been formally audited. How can we trust such an asset given what we have seen in Terra Luna today? What's your answer to that, John?
Well, listen, that's something that the lawmakers have to discuss. But USDC is another one. It's gaining a lot of share because it's more transparent. Ultimately, transparency actually increases adoption.
It's interesting, and we'll see if those. I think Tether tried to start an audit, and it wasn't completed. And I know a lot of people are calling for that. So we'll see what happens to these stable coins after the fallout. But the difference, I think, is really important, John, to point out, right? An algorithmic-backed stablecoin compared to an asset-backed stablecoin, especially you'd feel better if it was audited. But there's a huge difference.
That's right. There's a huge difference. And stablecoins serve a huge purpose in the crypto and the DeFi economy, and they're here to stay. And I think it'll also help out, all activity on various chains. So I hope the regulators recognize that as well.
All right, John, thanks so much for joining us. John Wu there of Ava Labs talking to us about what we've been seeing here and his ideas about the future. Coming up, managing the world's largest crypto index fund. We're going to speak with Matt Hougan, Chief Investment Officer at Bitwise Asset Management.
And Singapore's crypto ambitions, how restaurants in the city-state are building a following among crypto believers.
And to access all the latest data and the news on crypto, you can check out on your Bloomberg terminal CRYP Go, or you can just type top crypto. This is Bloomberg.
I think all options are on the table. I think certainly it's important that between now and the end of that 240-day process, which ends in early July, that the SEC hears from as many investors as possible, as well as academics, policymakers. Everybody has an opportunity to weigh in on this issue, and all of that is in fact considered as the SEC weighs the issue in front of them.
Grayscale CEO Michael Sonnenschein speaking on Bloomberg in March about his battle with the SEC for a physically backed Bitcoin ETF. Our next guest also has a stake in this fight. Matt Hougan, Chief Investment Officer at Bitwise Asset Management, is joining us now. Bitwise, of course, dropped its application for a futures ETF back in November while keeping its filing for a physically backed fund. Matt, it's great to talk to you. The SEC last month granted approval to one futures fund in particular, which was filed under the Securities Act of 1933 rather than the 1940 Act. Our analysts here at Bloomberg Intelligence say that's significant because a spot ETF would file under 1933. I'm just wondering how you viewed these developments and how it forms your likelihood of a spot ETF eventually getting approved by Gary Gensler and his team.
Oh, well, thanks for having me on. That's a great point about that 1933 Act futures-based ETF approval. You know, as I look at what the SEC has been doing over the past, let's say, 18 months, they've been taking a series of steps that have been pushing us forward closer to an eventual spot Bitcoin ETF approval. First, we saw a small limited interval fund. Then we saw a 40 Act futures ETF. Then we saw a 33 Act futures ETF. The next step in that progression is approval of a spot Bitcoin ETF. I think the two most serious applications in the market today are ours and Grayscale. They both hit their 240-day window around the first week of July. We're about a week ahead of where Grayscale is. I think both firms have submitted substantial research. They've been pushing the SEC, trying to answer the questions that the SEC has asked. And I think we're closer to a spot Bitcoin ETF approval than we ever have been in the past. Will we get it this summer? I think that's hard to say. But we've submitted over 200 pages of research. We think we have answered the SEC's questions, and we look forward to their review of our application.
Is the SEC the right authority? Should the CFTC have some say in this as well?
That's a very big question. I will say this. Throughout the process of reviewing spot Bitcoin ETFs, way back starting in 2013 when the first one was filed, the SEC has been asking serious questions and asking good questions, and the market has matured in a serious way. I'll leave it to the legislators and the two regulatory branches to talk about who has authority, but I do think the crypto space has sort of been steeled by fire. The regulators have been asking good questions. It's now a much more institutional market than it was even a year ago or 2 years ago. And for that reason, my personal estimates of our likelihood of approval increase every day that we move forward, just because the space is getting so much better under the scrutiny that regulators are providing.
Matt, is the failure of Terra, UST, Luna a problem for the entire crypto community?
I'm of two minds of that. On the one hand, serious institutional investors saw this as a high probability. As an example, Luna was never a constituent of the Bitwise 10 large cap crypto index or our market leading crypto index fund, precisely because the index committee knew this kind of unwind was a possibility. So to that extent, it's not a surprising outcome and therefore shouldn't be an issue. But it could be an issue if the broader space is unable to differentiate between reserve-backed stablecoins, which, as your last guest mentioned, are a bird of a different feather, a really important institutional advance, and these more experimental algorithmic stablecoins, which do have this risk. So it's not a factual risk to the market, but there is a narrative risk to the market. If people paper over the stablecoin space as one thing, that is a risk. What I actually think will happen is that this will spark regulators to put more stringent regulations in place. We're seeing that in Janet Yellen's testimony today. And long term, that's going to be a good thing for the market. Remember, the key insight on crypto is actually regulatory clarity is good for the market. Regulatory clarity will lead to the next great bull market. So I think there's a big silver lining to what's going on with Terra right now.
All right, regulators are friends, not foes. Matt, of course, it's not just Terra that we have seen a lot of pain in recently. It's really been across the entire complex. Bitcoin is essentially trading back where it was in July of 2021. One of our great reporters over at Bloomberg News wrote yesterday that the average purchase price of short-term holders was around $47,500. So there are a lot of people that have been caught and hung out to dry here. A lot of people holding the bag in this market right now. What is your message to them?
Yeah, I think you have to step away from prices and ask yourself if the fundamentals have changed. Look, we've seen these kind of pullbacks in the crypto market before. There have been 70% drawdowns in the crypto market, despite it being the best performing asset over the last 3, 5, 10 years in the world. So this volatility is an unfortunate feature of crypto. You need to step back and ask yourself, has anything fundamental changed? Have we run into a new technological limitation? Have we run into an unexpected regulatory development? From my seat, when I look at the fundamentals, they're actually stronger than they've ever been before in the crypto market. And for long-term investors, that means this can be a very interesting entry point, both in crypto assets and in crypto equities. Over the short term, I agree with Mike Novogratz, who had his video on. The short-term outlook looks volatile, but I agree with Mike McGlone that the long-term outlook is very positive. I think once we get past this macro-induced volatile market, the crypto fundamentals will reassert themselves and will be trading on to new all-time highs.
All right, Matt, really cool to have you on. Thanks so much for joining us today. Matt Hougan there of Bitwise Asset Management. Coming up, Coinbase's NFT marketplace is open and off to kind of a slow start. Is that a sign that the end of the NFT craze is nearing? More next. This is Bloomberg.
we're now in the Web3 world, and I think different countries want to attract this businesses so that we can provide the tools for people to use Web3 in a meaningful way, and that's really important for local economies.
All right, that was CZ, the CEO of Binance, speaking to us here at Bloomberg. He's one of many leaders in the crypto space who have chosen Singapore as their home base. The city-state has increasingly been at the forefront of the usage of blockchain technology, and it's apparently very clean as well. Joanna Ossinger, Bloomberg editor for Asia crypto coverage, joins us now. She's normally based in Singapore, and now you're here in dirty, disgusting New York. What's it like to be back?
It's great. You know, the corned beef, you know, all the shops and everything.
Katz's Deli. No, I'm kidding. Why do you think Singapore is such an important hub for crypto?
It's been pretty key because they started quite early. Even, you know, a few years ago, they were looking at the potential for central bank digital currencies. They've really been into funding blockchain technology. So it has been a place that was really attractive as a base in Asia. And it is getting a little bit more competition now. There's been some hesitancy from the regulators who especially have been nervous about, say, retail players getting defrauded by different efforts. There's been some trickiness in the way regulation has been handled, so it's sometimes caught the industry off guard. But overall, it is well respected as a regulatory framework, and so that's been very attractive to crypto.
Well, and of course, you wrote a Business Week piece about how a lot of restaurants are actually accepting cryptocurrencies as payment now. That's one way you can use a digital asset, right, as an actual form of currency. There's also stores of value and just as a trading mechanism, which is where also NFTs come into the picture. And yet that feels like it's a market going downhill pretty quickly.
Yeah, I mean, you have the crypto prices going downhill, and that can take NFTs with them because if they're priced in, say, Ether, and lots of people have Ether just kind of hanging around to buy a Bored Ape, this is going to make the prices go downhill. But there are also lots of uses for NFTs that haven't been explored yet, so I think that's going to be the interesting thing over the next couple years. Do you have, like, wines that you can tell what their provenance is, for instance? But yes, a lot of the NFT market in general, especially the art, is kind of going downhill right now.
Yeah, and of course, Coinbase just opened an NFT marketplace, so it'll be interesting to see what kind of commentary we get out of that on their earnings call this afternoon. Thank you so much to Bloomberg's Joanna Ossinger. Now, coming up next week, Joe Lubin, Consensus founder and CEO, as well as Kara Calvert, Coinbase's head of U.S. public policy, will be joining us. This is Bloomberg.